Hey guys, good morning. This is Andrew with Guerrero CPA. Wanted to wish everybody a happy holidays and a Merry Christmas. And also wanted to provide some last minute tax strategies that we may or may not already know about. And these will be quick, simple, nothing, too out of line, and that's going to require, time to execute. And if you know us, you know that we like to start planning in the summer just to give us enough ample time to, hey, if we got to acquire real estate or fund retirement, which you can still do, we have a good amount of time to execute. But given that it's the last week, last 2 weeks, and time has been flying like crazy, especially this year, we at least wanted to share something that would provide maybe some value to some folks out there. And off the bat, and it goes back to a post that I saw probably a couple months ago, honestly, about an LLC, right? And our LLC is important. Do you need an LLC? They can for sure and certainly have helped other people. But the way this post kind of angled it and made it seem was like everybody needed one, right? And that may not always be the case. I'll give you an example where it might not always be the case. You may be a W 2 employee and you receive some non employee compensation at 1099. Those forms are changing this year for 2020, but regardless, where they're not taking taxes out, it may not be a big amount. It may be something that where, maybe they're running some sort of small commission or a bonus structure through. In that regard, it may not be entirely necessary to set up an LLC for that specific activity. However, if you are primarily self-employed or a majority of your income is self-employed income, meaning not W-2, but 1099, you could benefit from an LLC in terms of tax savings, right? Now, that's a secondary thing on top of the asset planning that goes along with the entity formation. And that's very important to distinguish because, like this post that I'm referring to, I think it said, open up an LLC, claim an office inside your home, and be able to deduct, your rent or your mortgage payment or, utilities. That's cool, and it may work a little bit. It's not enough to justify the cost of formation and also the maintenance of it. However, like I said, if you do have a good majority of your income within non-employee compensation realm, then that would more than likely justify, hey, you know what, the savings or the means are going to justify the ends of those actions. So if you feel like you're in that category, definitely reach out to us. We can hook you up with Guerrero Law and be able to see, hey, is this actually going to benefit you and maybe even get some tangible numbers in that regard. And on top of the tax benefits, right? Because you know what? It might not always be about tax benefits. And you'll know this, especially if you're a real estate investor. Uh, Rental properties primarily, unless they have crazy cash flow, which we all hope for, but more on the single family realm, maybe even duplex, triplex area, they're going to break even or they're going to be in a loss. And I say loss with air quotes because you have tax leverage deductions such as depreciation, where you can buy things even on a credit card, utilize debt, and still be able to deduct that item 100%. And these items are great for deductions because I just said the magic word. You don't even need to go cash out of pocket for some items and still be able to deduct 100% of those items. So if you are involved in real estate, you do have holdings, go ahead and make those repairs. If you do need them, you see yourself needing them early on in the year, any sort of renovations, justified that they're not going to be large renovations because there's some clarification, in the tax code. I don't want to get too detailed on that, but in hindsight, any general repair under 2,500, there's no black and white picture, but for us, 2,500 bucks and under seems to be a pretty reasonable line, in regards to we're going to expense this as a repair versus we're going to capitalize and depreciate this over several years. But even then, in that regard, there is still some items to be able to bonus depreciate. Regardless, what does this mean for you? If you are needing deductions before the end of the year, that is something to aim for. The actual fact of the LLC that I was referring to and utilizing it in the rental property may not help specifically for tax deductions because you may already have losses. Where it may help, asset protection, of those entities or liquidity in those entities, which again, if you have that, if you're in that category, we definitely need to talk soon. Some other strategies that are very common: vehicle purchases. Got asked this a lot these past couple weeks. It's Christmas. Everybody's trying to find tax deductions, but also some people are looking to replace maybe a business vehicle or a personal vehicle that they use majority for business. And that's important to distinguish because in order to really use the type of deduction that I'm mentioning, which is a bonus depreciation deduction eligible up until 2022, assets placed in service before December, not 31st, it's a couple days before that, but regardless, we're still in that time frame. If we bought a heavier vehicle, and there's specific meaning behind that, if we bought a heavy SUV or some sort of pickup truck or specific use vehicle, again, we don't even need to go all cash on this type of asset acquisition, but we may still be able to take 100% deduction. Meaning, if I bought a $50,000 vehicle for my business and it's more than 50% business use, I could take 100% write off, even though I went $10,000 down and finance the rest. So that is a really, really good type of deduction because you get to keep your cash, expense the entire thing. And so if you're having a higher than usual taxable year, this would be one way to offset your taxable income, not in small incremental ways, which, like the home office is, but, not to dismiss it entirely, but this is a much bigger type of write-off in that regard. So just a couple things that I wanted to share and clarify. You definitely want to stay diligent when it comes to your taxes because it ultimately does trickle down to wealth planning, and also asset planning. But I like to say keep those two things that I just mentioned, the wealth planning, the asset planning, kind of the main primary goal. The tax side of it, we can come in behind and figure out a way that's going to leverage your taxes the best. I tell folks, and we hear this a ton, hey, should I stop working? I don't want to pay too much in taxes. That it sounds silly, and I'm sure it may be a joke, but I would say don't step over $1 to pick up 20 cents. We all should have heard that saying in the past. Instead, let's figure out a way to perhaps utilize that money to keep growing, protect it via asset planning. And with those two things, more than likely what we're going to find is tax deductions to be able to reduce that liability. And we've seen this time and time and again. But those are just a couple of things before the end of the year. And I know Ed's going to come out with a video as well, kind of sharing with you a couple little more quick tricks that you could do before the end of the year to be able to take advantage of on your 2020 tax return. So again, guys, thank you for listening in. Wanted to make this quick and simple. Happy holidays. Merry Christmas again to your family, and we'll be seeing you next year. Bye.